Imagine if the crypto that you're involved in had a methodology of reading where retracements occur in terms of when the price comes down, where it's likely to come down as a typical high probability action. Well, that's what we're going to cover today. We're going to talk about Fibonacci retracements today. It's a very, very powerful tool. In fact, it's one of the most powerful tools that you must know about. My name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. If you're brand new to the channel, subscribe because we deliver daily content, really helping you increase your financial health by giving you education on crypto and blockchain, this new revolution, this trillion-dollar trend. And in today in particular, we're going to break down Fibonacci Wave 2 retracements. And you know what that means. And today is part 4 of our 9-part series. All right, let's dive straight in. So if you've watched the other lessons, the other 3 parts, 4 parts, and now we're on the 4th part, you'll know that we're focused on Solana. We've had this wave 1 to the upside, and then a wave 2 to the downside, broken down to an A, B, C, which then the C broke down to a 1, 2, 3, 4, 5. So now, if you, just a quick recap, is we covered momentum on a weekly, pointing up, daily, pointing up, so that's momentum, check. We got pattern on 3 degrees, a wave 5 of a wave C of a wave 2. That's what we have identified in advance over here. This makes it a very high probability low, but again, it's not enough. Can we get a better gauge for this? Well, what most people don't realize is a wave 2 is a retest of the wave 1. And there's typical ratios that most wave 2s go down to. And there's 3 particular ratios. And today we're going to focus on retracements. So what we're going to do is we're going to measure this movement to the upside. And then we're going to have a retracement, some lines drawn based on this measurement on the way down. And the 3 ratios that you want to be aware of is 50%, 61.8%, and 78.6%. And how you do it, we're using a tool called TradingView, or the software is called TradingView. There's a tool called Fib Retracements. We're going to click on that at the bottom. And what we're going to do, we're going to measure this low. That's 1 click. And we're going to click at the top of this wave 1 high. That is the 2nd click. And we're going to click on this cog. And the 3 numbers that we want is most retracements occur at 50% to 62% and a maximum of 78.6%. Now you can see on the right-hand side over here, if I just make this extra clear, we are in this range over here between the 50% and the 62%, and the 78% is down here. So we're actually going to eliminate this one because we don't really need that part because there's nowhere near that at this point in time. So we can get rid of that over here. And we are going to look at this. So now, the very fact we have momentum on a weekly oversold, which we covered in part 1, with the daily making a bullish reversal, very strong, powerful information that says we got 2 time frames of momentum pointing in the degree of the larger trend, which is up, or a trend reversal at least. We got Elliott waves on 3 degrees accounts. A wave 2 broken down into an ABC, broken down into a 1, 2, 3, 4, 5, 3 degrees accounts. Now we've just added a Fibonacci psychological resistance zone called retracements. And the 2 key ones that we're focused on, 50% to 62%, and we're right in that 62% zone. And if we really want to make it even cleaner and clearer, let's get rid of the 50% because it's up there and we are in that 62% zone. This tells us this is now a very high probability zone. But is that enough? Well, there's another thing we can use as a bonus. As a bonus, I'm going to share with you. Most people are not aware of this. Most people are aware of retracements, but very few are actually aware of external retracements. Yes, external retracements. This is where we measure the wave B, and it's going to give us an external retracement, meaning it's external to the beginning point. So this is the beginning point, and the external retracement gives us a number to the downside. And most wave Cs are, let's measure it right now. We're going to use the same tool called Fib Retracements, but now we're going to click on, I'm going to do it a bit more to the right. the low of the wave A, the high of the wave B, but the ratios, the two key ones for the end of a wave C is we measure a wave B, I'll do a wave B like this, a wave B to give us the typical ratio. And what we're doing here is we're measuring psychology, the psychological mood of all the participants participating in the buying and selling behavior is 1.272 to 1.618. Now you can tell down here, the 1.618 is all the way down here, but the 1.272 is very close to the 62%. And this is what you call a cluster. A cluster. Very, very important, very, very powerful. So we can get rid of the 1.618 and get rid of these drawings. And now we've got an extra piece of information called a confluence of events. We've got momentum on 2 time frames. We've got Elliott wave counts on 3 degrees of counts, a wave 5 of a wave C of a wave 2. And now we've got Fibonacci ratios on 2 degrees. We've got the macro retracement of a wave 2, and we've got an external retracement of a wave B to measure the end of a wave C. Very powerful. Very, very powerful. But what we're going to do in the next part, so this is part 4. In part 5, what we're going to do is we want to get even better probability. Wave A's and wave C's have a direct relationship. Very important. I'm going to grab my notes. Just want to make sure I've made some notes on what I'm going to cover with you. Yes, that's what we're going to focus on next. We are going to focus on this wave A and wave C relationship. Very powerful relationship that we can see how the market typically behaves on buying and selling behavior, that we can get even more confidence that this is likely to be an end of a wave 5 of a C of a 2 before we get a potential wave 3 takeoff. And wave 3s tend to be one of the most impulsive waves. And you will know with Solana, we identified this in advance. You can go back and look at the videos and we'll see that we identified this and it increased by 1,000%. But we identified it. The key thing is in advance. So in the next training, in the next part 5, we are going to really talk about this wave A and wave C relationship. What is the relationship between the two? So if you like today's content, like, subscribe, hit the bell notification. We do daily content every day. If you want to learn more about Fibonacci and Elliott wave, take my free Elliott wave and Fibonacci masterclass, where I'll show you how to marry up Elliott wave pattern and Fibonacci price. The key things that you need to know, the 3 key rules of Elliott wave, which allows you to see the valid Elliott wave counts of how the market is behaving. All right, let's finish today on a quote. The quote of today is from chapter number 2. It's from Mr. Warren Buffett. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Now, it's important to realize when we're saying this rule, it's like when you're playing tennis. You know, rule number 1 is never lose. But, you know, there's the opportunity to lose, as in the possibility to lose is there. You can't win Wimbledon without the possibility of losing any of the rounds before you get to Wimbledon. And in crypto tennis, it's the same. It's probabilities and never certainties. But what we're aiming to do is stack the odds in our favor, while we minimize the chances of taking a loss and maximize our chances of making gains. And in the first 4 parts, we've covered momentum, we've covered pattern in 2 degrees, and then we covered in part 3 an extra degree of wave count. Now in part 4, we've covered Fibonacci retracements and external retracements. In part 5, we are going to cover something called alternate price projections, also known as Fibonacci price extensions, to measure the relationship between wave A and wave C to increase the probability even further, to give you a better edge so you become the casino, so you have a higher probability of winning this beautiful game called crypto tennis. So again, if you like today's content, like, subscribe, hit the bell notification. It shows your support for the channel and it means a lot to me personally. But also take the masterclass. It's free. Upskill yourself, and I'll see you in the next part of this 9-part series. All right, see you soon.